Welcome to the channel Future Millionaires. I'm Mike the Investor. Now the Fed has given us another warning, or more so confirmed, what will be happening in the near future that will be affecting the markets in a massive way. And I'm referring to the meeting that came out this Wednesday when they revealed the Fed minutes. And they had three major concerns, which we're going to be talking about in this video. Now, before we dive into it, I want to take a brief second to talk to you about Unstoppable Domains, one of the #1 places to go if you're looking to purchase a blockchain domain. Here are some of the extensions at .zil, .crypto, .coin, .wallet. They start around $5 depending on what extension you go with. The beautiful thing about blockchain domains, no renewal fees. You only have to purchase it one time, and you can also mint it completely free on the blockchain. Now you can already see 2 million plus domains registered, so definitely go ahead and grab yours. So if you're wondering what else can these blockchain domains be used for besides a website, they can be used for logging into different dApps, logging into different websites, password lists. You can also use it for payment addresses and much more. Alright, so if you'd like to check out Unstoppable Domains for yourself, there will be a link in the description below. But now that we got the intro out of the way, let's go ahead and dive into the CNBC article and look at a couple statements right after this. Welcome back to the channel, Crypto Investors. We are now on the CNBC article. This came out February 16th. The headline says, minutes showed Fed ready to raise rates, shrink balance sheet soon. And I've also mentioned this multiple times. I also started talking about this early December, and I'm going to show you towards the end of this video as well, so stay tuned. Now, if we just look at some of the key points here, the first one, Federal Reserve officials outline plans for interest rate hikes and a reduction in the asset holding on their balance sheet at their last meeting. Now, the second key point, minutes released Wednesday from January session show concern about inflation and financial stability through members urged a measured approach to tightening the monetary policy. And then we have the third key point. FOMC members noted that inflation was beginning to spread beyond pandemic affected sectors and into broader economy, which definitely we can see that into goods and services and all of that other stuff. And so it says the Federal Reserve officials set plans into motion at their most recent meeting to begin raising interest rates and shed the trillions of dollars in bonds on the central bank balance sheet, according to minutes released Wednesday. Now it goes on to say that they indicated that the interest rate hikes likely are on the way soon, which we already know, and they said the unwind of bond portfolio could be aggressive, meaning it can be a lot of selling at one time. Now, the participants observed that in the light of the current high level of the Federal Reserve security holdings, a significant reduction in the size of the balance sheet would likely be appropriate. And so as we go down just a little bit further, I have a couple things highlighted here for you, because I do want to leave some of this for you just to kind of research for yourself. But in the addition to the rate talk, the committee set out procedures for how it will start unwinding its nearly $9 trillion balance sheet, which is crazy, which consists largely of bonds it has purchased in an effort to drive down rates and stimulate growth, which is where that QE, quantitative easing, came from when they were printing money to buy back bonds and other assets. Now it goes on to say that March is also the month when the asset purchase program is set to end. Now, before it's set to end, check this out. The committee set forth a path in which the Fed will buy $20 billion in treasuries over the next month and nearly $30 billion in mortgage-backed securities. And all this is doing is pretty much giving a fake pump, because they're getting ready to sell this anyway. So honestly, I don't even know why they're buying this, and they're about to be selling assets off of the balance sheet. And what this does is give a false perception that everything is okay. And so the Fed targets inflation to average around 2%, and officials have concealed that the policy needs to get tighter to bring prices down. So you can see they are already painting the narrative as if 2% isn't enough for the year, or 1.75% isn't enough for the year. They are prepared to raise it even higher unexpectedly. And so let's talk about the three key factors. Number one, we have inflation, and because inflation is getting out of control, they have to raise interest rates to help control this. Now, let me show you the connection to the other two. Now, for them to raise interest rates on an already inflated balance sheet that the US cannot pay back, for them to raise rates, they have to cut the balance sheet, which is the Fed tapering. And this is why they're selling assets, because you're not going to be able to raise rates on debt you already can't pay back. It doesn't make sense, which now takes us to the third thing. Stopping QE, which is quantitative easing. That is the printing of money. That is when they actually print money and put that money into the different markets, which pumps it up as if everything is 100% okay. So hopefully that makes sense to you. I'm just giving you the real deal, because also if you think about it, if they're going to stop QE, that makes perfect sense, because if you're selling assets off of the balance sheet, why would you be adding more assets to the balance sheet if you're trying to cut it down? So you can see how all three of these things coincide together, and with all of them being negative right now, it is definitely going to have a massive effect on the markets, because when they start selling, bonds and all of that debt, that is going to have a massive effect on traditional markets, which crypto is still very much correlated to, which is going to have a massive effect on crypto. Now, one thing I want to make clear, crypto isn't going anywhere. Blockchain isn't going anywhere. It is still the future. However, there's a lot of mud that we got to climb through and wait for some things to unfold before I truly see a true turnaround in the crypto market and seeing a six-figure plus Bitcoin. We got some things to happen first before that can take place. But I want to show you a few YouTube videos I put out before this one to try to warn you on what was coming before we got closer to these things taking place. Because remember, back in November was when we saw the latest all-time high of a 69,000 Bitcoin, and we saw the market at a 3.1 trillion. So let me just show you a couple videos, and also I'm going to show you a couple things I said as well, targeting what we just kind of covered. Let's check it out. So here we are on YouTube. You can see this came out December 9th. All right, this was last year, the beginning of December. Crypto crash is here. What I am doing, and I'm going to briefly show you what I said as well. Let me turn the volume up on this a little bit. We have the Fed tapering, which means there's going to be less liquidity pumping the markets, which means the prices aren't going to be as high as they were before. Secondly, we have the interest rates raising. We have inflation. We also have the debt ceiling for the United States. All of these things are going to affect the market. As I said it there, December 9th, okay? Let's go over to this video, which was only 4 days after, December 13th. You can see 10 things affecting the markets. Number one, Fed tapering. Number two, raise of interest rates. Number three, the debt ceiling, which is why they're cutting assets off of the balance sheet. Number five, you got inflation. Of course, I don't have to say anything about this right here, but I'm just showing you guys. I was trying to give warnings on what was coming, before we got closer to this stuff. As we look here, just one more example. This was the beginning of this year, second week of January, January 13th. Listen to what I said here. So don't be fooled by the quick pump that we are seeing, even though Jerome Powell made a statement stating, hey, we are not going to actually raise rates at this time. But if inflation continues to rise, we will have to raise rates. Now, my opinion, I think they just prolonged it because at some point they are going to have to raise rates to control inflation, So I said a lot more on that, but I just wanted to tell you guys, I've been talking about this since the end of last year, telling you guys, hey, what is coming? Be prepared. This is not to scare you, but this is to help you be prepared mentally and to help you be prepared to make your own strategy, to be prepared when lower prices come, you can take advantage. So when we do see that rebound, you're able to make more wealth because you prepared for what is coming. And so if you gain some value from this video, most importantly, definitely smash the like button. It really helps out the channel, and also share this out as well with someone you know so they can understand what's happening in the world today. But that is all I got for you. I will see you in the next one.